Hello and welcome to Module 6 of Making Money with Forex from Raven Glen. My name is Jeff Fitzpatrick and I'm your tutor for this module. In the module we're going to look at what moves the markets in terms of news. Scheduled news, unscheduled news and general news. How you can trade them and what their effects are. As far as traders are concerned, news comes in three varieties. Scheduled economic news, such as regular updates from the Bank of England or announcements on GDP, for example. Unscheduled economic news, when something happens of an economic nature or a speech by a politician or banker. And then general news, big events that are large enough in effect to move the markets. To obtain scheduled news quickly, as soon as it's actually published, I use a website. It's free to use and it's www.forexfactory.com. When you first go to the site, it will look something like this. Note the time at the head of the call-out arrow. It's actually probably in US Eastern Time. We need to change this to match the time here in the UK, if that's where you are. That will make sure that all of the news items are shown on your screen at the time they're expected to be announced in UK time. To match the time to UK time, just click on it and it will take you to a new screen. Once you set the time up properly, return to the news screen and you'll see there's too much news here for us. There's news of lots of different currencies and also news which is red, which is presumably very important. You're right if you think that, right down to white, which is probably not very important at all. So we want to filter this out. Towards the top right of your web screen at the moment, there's an area called Filter. If you left click on that, it will open up an option box so you can take away some of these extraneous pieces of information. And here is the filter box dialog. You'll see that I've unchecked everything except the news items that are highlighted as red, and I've also taken away all the currencies we're not interested in. I've left in the GBP, the pound, the US dollar, and I've also left in, for the sake of interest, the euro, because lots of European news affects our currency pair. The aim is to get your news screen looking something like this, only showing red news items and only those that are to do with the pound, the dollar or the euro. You can see in each case what the previous result was, what the forecast is, and when it becomes available, what the latest news is. Underneath the two red actual results, there's a little green circle. What that means is that we're approaching the time when that news item is about to be released. And as long as your screen is being refreshed, then it will update automatically. Not all scheduled news is created equal. The ones that really matter, the news items that will drive the market, I've listed here. Employment and unemployment figures, retail sales, interest rates, particularly if there's any change in them or thoughts that there may be changes to the interest rate, the gross domestic product, manufacturing service outputs, and also inflation, the consumer price index, CPI in particular. So once we have scheduled news items out, the question is what to do with it. There are three ways basically of trading scheduled news. The first is to put a trade on a few minutes before the news is released. You'd only do this if you have a high expectation of what the news will be in terms of will it be better than forecast, less good than forecast, or equal to forecast, and if you've got some knowledge of what may happen as a result of the news being different from forecast. It takes advantage of the news release setup where a bullish or bearish surprise takes place. Identifying these opportunities does require a good understanding of the news itself and of the circumstances prevailing around the time of the news announcement. This is some quite advanced stuff, but I will give you some insight into what is expected, and we can get that from the website, but also I keep a good record of what surprises have caused what changes in the market over many years. The second strategy is to put a trade on soon after the news is released. Again, looking for changes between forecast and actual results and knowing in advance from analysis what the differences are likely to mean in terms of changes to price. In addition, this trade can be used in combination with that shown first, so that you may have two trades as pending orders, one assuming that the news will be better than forecast and one assuming that it will be worse than forecast. Then whichever directional change takes place, you're in a position to take advantage of it. The third strategy for taking advantage of news releases, scheduled news releases in particular, is to put a trade on after the change has occurred, so after the spike has occurred, so a little later than the last strategy, when you know that the spike is likely to come back down or to go back up, but to reverse. Again, statistical analysis tells us which trades and which news are likely to reverse in this way. So therefore, with all three of these, it's very important that you actually understand news and understand the effects of that news before you can predict what it will do to prices and therefore take advantage of that situation. This slide shows some of the typical effects of news. Where the blue arrows pointing to the middle of the screen, you'll see a spike where the price went suddenly down and quite a lot down and then back up again. On this occasion there were two news items came out and both of them were away from forecast. The first was bad news on unemployment in the UK, and the second was that there was no change to UK interest rates following rumours that there would be. So that's interesting. Not only are we saying that bad figures can be drivers of the news, on occasions, if the market is expecting good or bad news, even no change to the figures can actually make a difference. The price spike shown on this slide, pointed to by the blue arrow, was as a result of sales figures, retail sales figures being better than forecast. But you can also see how there was some anticipation that the figure would be better by the rise in the price leading up to the spike itself. That's quite a frequent occurrence too. This slide shows a news spike reversing, very frequently the case. So news is announced, it drives the market in one direction or another, and then within quite a short period of time, the price drifts back to where it was before the news was announced. It happens an incredible amount of times. And again, I have kept a complete record of this over the last 10 years for which news announcements work in this way. Of course, not all news items are scheduled, whether they're economic or other than economic, political. An example was when Osama bin Laden was killed a year or two ago now. Stocks in the American markets rose sharply on the news, and as a result, currencies were affected and came sharply down in the case of the GBP-USD pairing. You can see the effect here. Now this is quite interesting in that it's not actually economic news. It really probably wasn't going to make any economic difference to either the UK or the US at all. But there was a great deal of sentiment, and sentiment is what underpins movements that are driven by news.